Good evening. I'm Richard Laufmann. I'm the CEO of Rex Minerals. We're an Australian ASX listed company with an exciting copper build going on in South Australia, significant project, and a very exciting gold project emerging in Nevada, USA. So a lot happening at Rex, and I'm looking forward to telling you the story, Matthew.
Richard, lovely to meet you. Thank you very much. We've had a go previously trying to get you on. We're trying to coordinate our diaries, but we've done it. We're about to hear whether you're sexy Rexy or not. So we've not spoken or met before, so we should probably dive into the story proper. Let's start with you though. So what's your background? In fact, you've also renewed the team, the board. So maybe tell us a little bit about them as well.
Sure, that's pretty significant. So look, I'm a mining engineer. Spent a lot of time in the gold fields, gold, nickel and copper. And that's what I've done. I've been 20 years now in the listed space. So I had a gold project, built a mine underground in a gold mine in Ballarat in Victoria. Had a very big copper project with Glen Strata in the Philippines for quite a few years. Seeded Rex quite a while ago just as an explorer, and we were very successful in discovering first in South Australia and now Nevada. We've repopulated the board in the last 12 months. We've moved to now an operating and construction board. We brought in Ian Smith as our chairman. He's the ex-CEO of Newcrest, very well regarded and known in the industry as a can-do sort of guy, out of Rio Tinto and Western Mining. Actually ran Olympic Dam in South Australia. We also have Greg Robinson, ex-BHP, ex-Merrill Lynch, also ex-CFO and CEO of Newcrest. Got a bit of a theme there. Some of the Newcrest superstars that built the company to what it's become, who know what they're doing. We brought on a brand new director based in South Australia. He starts 1 December, called Andrew Seaton. He's currently the CEO of Naval, the submarine outfit down here, but he's a proud South Australian, having served about 8 or 9 years as CFO at Santos. And we have Ron Douglas on board, who's sort of like a 2IC at Ausenco, but Ron's been involved in about 5 or 6 of the main copper builds in the world in the last 3 or 4 years, including the Carrapateena project in South Australia. So he brings a lot to the table. And he's recently stepped down as a non-exec and become an executive director. We also have our CFO on the board as an executive director of finance also, Amber Rivermonte, who's been in the public space for over 20 years now. So we've got a really good front bench.
You do. 2 things interest me. One, you say you seeded the company originally. So is that money that you've gone and raised to seed it, or have you guys actually put your hands in your pockets and seeded it that way?
Yeah, 2 of us actually put our hands in our pockets, and that's how we seeded it. And then we IPO'd it when we pulled together an asset base. We traded into the licenses in South Australia through also an ex-Western Mining geologist, because this is part of that Eastern Gawler crater thematic that began with the discovery of Olympic Dam, was followed up with Prominent Hill, moved now to Carrapateena, and we're at the southern tip of that eastern limb. So there's a theme running through our company of ex-Western Mining people who grew up in this.
Totally. So you courage of your conviction, you've seeded it. I mean, how much money are we talking about here?
Oh, I'll put at least a brick into the company by now. So
what's that mean? Sorry.
Oh, sorry. Yeah, about $1 million.
About $1 million. Okay, so meaningful. Yeah. Okay, fine. And tell me about the team. Obviously, Ian, Greg, Ron, Amber, etc. Who's active? Who's just a nameplate?
We don't have a nameplate. We don't have any nameplates. And look, we've been a small company. We're not paying ourselves big salaries. We've been doing the job, getting it moving, getting it done. And everyone's had to pitch in the whole journey, really. The difference is the previous board, they'd been there as part of the transition and the approvals and everything that we've had to achieve. Now this board is fit for purpose to fund and build a big project.
Right. We've got a team here who've got the experience of building, and you are going to build. It's not just talk. You're not just trying to get competitive tension. You're going to build it. Okay, cool. So let's talk about the project. And quite often mining is about timing, right?
Yes.
You timed your raise in the middle of the year rather well, didn't you? You got a good reaction, $50 million. Yeah. Price was right. It's come off a bit since, but tell us about that process. What did people buy into?
Well, we were very clear. This is part of pre-development. So these dollars are not going into the sexy bits and pieces like, oh, we're not, yes, we're doing some fantastic drilling. We've got more drilling in Nevada, but I don't think that's what's driven this investment group. So we've moved the company in 18 months from about 5% or less institutional shareholders to nearly 25% institutional now. So we've had to change that. That was part of this raise, is to get some people set for sure.
And just we'll state the obvious, but why did you feel that was necessary?
Well, we're going to, this is not play money. It's 600 million Aussie all day, every day. So we obviously need some players with pockets. We also need some players with development conviction in a copper thematic, right? And those people also changed the paradigm for us. So off the back of this, we're starting to get research, right? Obviously, big investors, they want to see the companies researching us, and that's starting to come along. So we've only raised the money about 9 weeks ago. So things are, they're moving very quickly for us. But for sure, that was very positive, and it's letting us get on with business. And there's a lot of pre-development on a project like this. There
is. And I'm kind of intrigued by this because quite often we are speaking to companies pre the stage that you're at now. It's kind of rarefied out in the sense that you've got a stack of money to get this thing into production and you've got to go about doing it. So, and if I look at your share price, it's kind of come off. People don't seem that interested, but you're actually doing all the heavy lifting at this point, aren't you?
That's right. So it's not sexy, and we're not marketing. We can't get out the door. And in fact, our largest shareholders have said, we want to get on the ground. We'd like to see the project, right? And there have been people who have put their hand up. They'd like to invest, but they'd also like to step foot on the ground, see the project. If you take a big position in something, generally someone would like to say, I've been there, but at least know what's going on. So we've got to tick that box yet. Look, what I think it was is, the Australian market is relatively small. Most people know that. And it hasn't had appetite to back investment and development projects in mining space for a long time. So we've entirely invested in this round inside Australia. So we haven't tapped the UK, US markets at all. And so we got that support very quickly, done locally. We had Euros and Macquarie working on it with us. We put the money together quickly and people were really prepared to support us. And in actual fact, bar one insto, everyone who came in the raising is still there and has built their position slightly. So that's really positive too.
It is. Okay, so I guess enable this conversation and move forward. Can you just give us a kind of top line, meaningful numbers with regards to Hillside? Because I want to sort of dig into it a little bit, if I may. So,
sure. Well, look, we discovered 2010. By 2015, we had a reserve statement and a feasibility study for a 500,000 tonne reserve on a 2 million tonne copper tonne resource. So 1.4 million ounces, 2 million copper tonnes. We discovered this as a junior from surface. It's pretty much from 5 metres below surface. And so we're mining it at 6 million tonne per annum, which will produce about 35,000 copper tonnes, about 25,000 ounces per annum for the first 13 years, what we call stage one. That's what we went to market with as a final feasibility. Remember, 500,000 tonne off 2 million. Recently, we upgraded the reserve to 1 million tonne. Right? Below that, we don't have a lot of density of drilling, but we've got another 1 million tonne of copper sitting there, and you can see some outstanding results. We've got thicknesses from 50 to 90 metres. We've got grades from 0.7 up to nearly 3% copper at depth, but just not a lot of drill holes. There will be time because that 1 million tonne reserve could extend to a 30-year mine life. So that's a starter pack that we have. We have an initial 13-year mine life. We just cut that back and we go to the second stage. That's a fantastic deposit. And we haven't drilled below 700 metres. Most of the deposits in the eastern limb of the Gawler, like Olympic Dam and Carrapateena, they don't start until 500 metres below surface because they have a lot of cover. We don't have very much cover on the Yorke Peninsula, so it's a big advantage. And we've got a lot of infrastructure coming to our door, highways, the Port Adelaide around the corner. We don't have to build train sets. We don't have to build highways. We don't have to build power lines and water lines. We're extending a water line. We're extending a power line to our site, but effectively all the infrastructure is there.
Okay, so this kind of stage 1, stage 2 approach. I'm trying to work out what the market understands. You said we don't market much. We have not marketed much. We've not taken people to site and so forth. And that's now in the public arena. That's such a big part of this. And I get the move from retail to institutional, but it's still 75%. Well, sorry, it's 25% institutional. What is the retail holding? Because I don't know what management has.
The rest.
It's the rest. Well, how much does management have?
Management's got about 10% all up.
So you're still heavily retail focused, and you need them to kind of drive the liquidity component here. So, and that's where I want to get at. You're talking a big game there, which is great, right? So it's a big operation. You know what you're doing. You've got the A team on board to help you do it because they've been there and done it before. But a big part of this is you are going to have to up your game with regards to the marketing. And you're going to have to tell the story, and you're going to have to explain stage 1 to stage 2, how the money flows, what you're doing with it, where the exciting bits are, and how do you actually kind of insert yourself into into the marketplace in terms of sales, etc. So, what are you going to do? How do you approach that?
Look, and that's a very good point. My board are chewing at me at the moment on that very issue. So, to me, it sounds kind of glib to say market. All right. Certainly, I need to get on a plane and get in front of people. That's a given. But we also have news flow. So, and some exciting news flow for the project. So, extending the power line, moving the roads. That's not all that exciting, but it is movement at the station. Right. It's building a presence in South Australia as we get ready, as we move towards appointing our APC contractors and honing in on the mining solution. Are we owner operating? Are we contracting? That will finally define the ultimate capital number that we're going to have to fork out. We've already opened a data room to banks, and we've invited a group of interested banks to the party. So we're going through a process now to put the banking financing together. So we know, let's face it, if I were speaking to you 12 months ago, we would have struggled to get 40%, let's say, from banks in the copper space, 40% debt. Today, they're clamoring around 50 to 70. We've never, we haven't given away any concentrate. We don't know that we have to. We've got a clean concentrate, so it's kind of exciting. We've not just highlighted the 1 million tonne reserve, which is just a cutback, stage 2, right? But what we've also done is some test work on a thing called coarse grind. Now, this is really interesting, right? This is thrown up the opportunity that we could increase the throughput through the plant that we're constructing from 6 to 8 million tonne. And we don't have to put a lot of investment into that. And we don't have to do that until about year 2 of operation. So that's a nice to have an addition. On top of that, of course, one of the first things we'll do is put a few deeper drill holes in, because this thing could turn into anything below 700 metres. And it can grow substantially down to 700 metres just on the evidence of the drill holes. It's only dearth of drilling that's constraining the resource on strike, on depth, right? So a lot of upside without even starting on our licence area. That's in South Australia. But think of that, how many copper companies that that are 100% owned have given nothing away to anybody in the go bay now, fully permitted, ready to begin production, going into the financing, not mucking around, right? This is, like you say, this is not a game of watch the hand, something else is going on. And on top of that, we've had this huge success in Nevada so quickly with the Hog Ranch project.
Yeah, no, I want to get to that, Rich. I do want to get to that because I was aware of it before you guys picked it up. And let's stick with the copper here because I'm trying to piece it together because you guys, you CEOs generally, when the camera stops rolling, you can very quickly go, look, here are the 5 things that are really, really important, A, B, C, D, etc. And you go, oh, okay, that's fine. Yeah, you know what's important. And I just wonder how you as a company lay out what are the 5 things that are going to change this company meaningful, because I'm looking at the market cap today. I'm looking obviously share prices come off, etc., and how companies like you sometimes have to go and take unconventional money, alternative financing. I get where you're at today, but is there anything in terms of what you need to do, whether it be the coarse particle flotation stuff or the expansion drilling or the whatever else that you've got lined up, which is going to cause you to have to go and take more expensive money, and dilutory money at that, or what are the things that are going to mean that I can go from 50 to 60% to 70% debt, because that's kind of, maybe that's the goal. How do you manage all these small pieces to ensure that, your shareholders are happy, you're happy, and you get the money that you need when you need it?
Sure. So let me be really clear. Having nice upside opportunities is fantastic, and that's fruit for shareholders coming in. Yep, this is not a one-trick pony 13-year mine life. This could be 30 plus years, but that's what we're going to build. We're building the team to go, right, you go ahead, you build that. This is what we're delivering. We're delivering 35,000 tonne on time, on budget. That's it. Over here, absolutely. Opportunity to expand that production. It's not like, oh, that's it forever, right? No, you can definitely expand it. It's built in. Yes, we can double the reserve again, built in, right? So that's all comes later out of cash flow. We've got to get into production. That's our absolute focus.
Brilliant. Okay, so that's it. Step with the kind of Aussie model of get into production quickly, make sure that there's money being produced, and it's reducing the dilutory effects going forward. Okay, fine. I guess we'll see how that plays out. So in terms of where you're at now, with the money that you've got now, what are you going to be able to, what are we looking for next? What's the big moment?
Okay, so we're in the market at the moment for an EPCM contract as well. We're getting pricing for EPS supplied to us. We should get that at the end of this month. So we're trying to build in the capability now with an engineering firm to complete that box and say, here are the drawings, we are ready to construct. Here's the price list, it's all sorted. We know what we're building. We know the schedule we're building it in. We know the delivery capability. Done. This is going to pop out the other end at $1.38 C1 a pound. That's what we're doing today, right? That's what needs to happen. And when people see this start to happen, I think there's general hesitation in the market. Will this really happen? Right? Are they really going to build it? Right? And well, shit, they've just appointed ABC. Gee, now that's the mining sorted. Oh, they have actually got a banking syndicate, and it's not 22 banks from, it's one or two, but we're not restricted to that because we've got venture capital opportunities, right? So I've been, some of our guys have been involved in the 29 Metals deal as well. So we've seen how to put that together. So there's a number of ways we can go on the financing. We're not restricted to that, but we're not going to weird lenders of last resort at the moment, not at all. Okay, so we're going in at the front end. We're looking for the best rates because, well, we're offering a good deal. You want to worry, everyone wants to tick the ESG box now. Well, you tick that by investing in copper in South Australia. Job's done. Move on. Right, that's an easy win. So I think it's a good product that we're offering. We never ever marketed this as the second coming, right? And we always said, look at it at $3, IRR is 16, right? And we always said we think copper projects need about 350 to get off the ground, right? IRR starting to shape up at 24, 25, right? Now we're at 450. Well, IRR's through the roof. That's awesome, but copper can still go back to $3. So we need to be aware, and everyone else needs to be aware, that we can wash our face comfortably. We've got an all-in cost of about, let's say, $1.61 at the moment, right? An all-in cost. So not a C1, an all-in cost. So copper can go back a fair way once we're in production, and we'll be in the bottom half of the cost curve. But we're not down the bottom, but we're in the bottom half.
And that's for stage one you're talking about, not the stage 2, 30 plus year life of mine. Yeah. Right. Okay, good. That's interesting, because again, when I talk to companies, they are, of course, like, oh, we're only using $3.15 copper. I'm like, well, that's great. But if you look at the 3-year average, that's not so great. Do you know what I mean? So it's just okay. I like where you're coming from. Okay, let's go over to trot over because I don't want to take too much of your time. But let's trot over to Hog Ranch. Obviously, different jurisdiction, different commodities. You're de-risking. Why do it? Why go for that deal?
So the mighty Hog.
The mighty Hog.
Look, it was a great opportunity. I thought at the time. I actually employed the general manager who used to run it to help me build a heap leach in Western Australia back in 98, 99 for Western Mining, a gold heap leach. And you won't believe the trouble I went to convince regulators in Australia and the board of Western Mining to allow me to build a heap leach, because Australians generally don't get their head around heap leaching, right? It's not what we do here. It doesn't work all over the place, but it's just not something that they do in Australia. So I actually bought the general manager from Hog Ranch, who taught me what I know about heap leaching in Nevada, to Australia to make sure we laid the pad properly, because no one in Australia knows how to do it, right? So that's when I became aware of Hog Ranch. Years later, serendipity, and our GOs wanted to peg something, right? And they wanted to peg the old Hog Ranch licenses in Nevada. To be honest, I was only expecting an extension below the pits, because Western Mining had about 3 or 4 very tiny pits at a 1 million tonne per annum project. They owned it for 4 years. And they didn't close Hog, they got out of North America. They totally got out of North America, and Hog was one of the casualties. I did not expect what we found when we uploaded the drill hole database from the old Westerns days. 2,500 drill holes, right? So we had no ounces at the moment, 2,500 drill holes, and I'm expecting 200,000 or 300,000 ounces. And the geos walk in and say, Jesus, Rich, the footprint here is huge. So what do you mean? It's huge. But in the day, at $300 to $400 an ounce, and Western Mining drilling for a 1 million tonne per annum mill to feed it, they had no license to go and put big resources around things and look for a super pit. They were just trying to wash their face on a little acquisition they'd made in Nevada. So very quickly, we put a resource to it. In 18 months, we grew that resource from nothing to 2.2 million ounces. We've already got historical recoveries. We did a few column tests just to confirm. You know, we got like 60% recovery in 5 days and 80% or 84% recovery in 22 days. So, and that's at 1.5 inch crush size. So we did a very quick study, because at that stage, we thought what we had was what we bought, right? These little pits and the licenses around that. But our thinking very quickly changed as we started to try and learn about the geology. And not a lot of geology was done in the day. Some was done very, very well around the pits. So we bought the old geologist who used to run those pits from Western Mining back in, and learnt what we could from him. He'd done all the mapping, and he'd done a lot of very good geological interpretation. So we used that and we leveraged from it. There'd never been a mag survey. We did a mag survey. Hyperspectral's a new thing. We did hyperspectral. We realised the geochem in the day was just, well, this doesn't work. That's nothing like it if we redo it. And all of a sudden we redo some geochem and it's going, shit, look at that. Those drill holes, this is glowing at us. So now all of a sudden we've quadrupled the license area over there, because it is such an exciting caldera of such opportunity.
Right. So you've had it since end of 2019. You've not been throwing a lot of cash at it. It's sort of moving forward. You're increasing the resource, whatever it's 2.2, I think you said, of all categories. For it to be, well, what's the intention there? Because, you know, it's sitting at, just over 500,000 ounces, nearly, 600,000 ounces of indicated. No real value is attributed to that generally by the market. We need your 1 million ounces, or these days 2 million ounces for it to be considered valuable in that context. So given what you're doing in Australia, Hillside, how do you approach this? How much money are you going to throw at this? How much time? Have you got enough team to look at
right,
this?
So we have a director looking out for us in the US, Cherie Leedon, good exploration geologist, out of her day out of Rio Tinto, quite entrepreneurial. We've brought some fantastic guys, ex-Newmont geos to the table. We've got a great chief geologist who's with the Brains Trust for acquiring this, and he's been building the model. So we've been building a really good team. But the first thing we did is bring in a bunch of people that don't hail from Nevada. And they have blown the shutters open for us, right? It's like, gee, look at this. Ooh. And everyone's going like, gee, didn't expect to see this. So if you asked me what we were doing, we were very focused on how quickly can we turn these into some producing heap leaches. And that's why we very quickly jumped on a scoping study. But now I think it's looking like this is an order of magnitude larger. It's not, let's see if we can get 2 to 4 million ounces. Let's see if we can show if this is a 10 or a 20 million ounce field. And it's got all of those opportunities written on it. Remember, I used to run the gold business for Western, so I've seen what a big gold field looks like. And I'm not a geologist, I'm not pretending.
But what does it look like? I mean, you got to use cut-off grades, and you got to give people a sense of, what's there, and obviously at some point works with some sort of economics. So big doesn't necessarily always mean profitable. So what are you seeing?
No. So we've now got a million of those ounces at 0.65 grams, right? We ran a study at 0.5 grams because the strip ratio is very low. It's 0.5 to 1, 0.5, less than 1 to 1. At 0.5 grams, all day, every day, all in costs, all up is less than $10. And that's not even particularly economy of scale or competitive with that Nevada North American scene. When you look over the fence at Liberty Gold, or you look over the fence at Marigold, or, you look over the fence at some of these other projects, well, just bringing power in it, and we can almost take out $50 an ounce. So you can see straight away, we crushed 1.5 inches, crushed screen agglomerate stack. All of our drilling, all of that historical drilling, 80% of it is less than 75 metres from surface. It's very shallow, oxide project. However, I'll put this to you, that's exciting. Now, we could go, let's put aside $10 an ounce, say, right? And let's convert another 2 million ounces. So everyone goes, wow, they got 4. But what if over here, we discover a whole new geological ore body type that has a potential to be another 3 or 4 million ounces. So we went there on a model. We put in 4 holes. 1 hit something at the end, not much. 3 came out winners, right? So
what does that mean? What's a winner look like?
So we've got 3 winners. So 111 metres at 0.8 from surface, right? We've also got another intersection into a brand new area. Only our geological targeting geophysics. It's not like we're going to an old area. 56 metres at 2.2. And we've got 114 metres at 0.63, all above, right, what you need to make money. At about 0.45 over there, you can make a lot of money. But this is another deposit type. But we also have some holes in the area where we're operating, where we've put our original pit design. So all of this is post our last resource. Well, we're hit from surface, or from 13 metres, say, 90 metres at 1.23, 50 metres at 1.35. From zero, 210 metres at 0.66, 210 metres, that's nearly 1/4 of a kilometre thick. And remember, the old drill holes pretty much are around 50 metres drilled vertically. So the opportunity here is pretty exciting.
It is exciting. You're excited, but there's a bit of what if, and there's a bit of this could be monstrous. But if I look at the strain that you're going to put your company under back in Australia in terms of the money that you're raising, the focus that you're going to have to give to the copper project, because that thematic is obviously hot at the moment. You're painting the picture at Hog Ranch of something which could be of huge scale. So I'm interested in how do you go about managing that financial environment to bring Hog Ranch through? You've got to do a ton more drilling. You're going to need to finance that. That's not big bucks, but at some point you are going to have to raise more and more meaningful money. So what's the timing in relation to Oz versus Australia, emphasis of where you allocate your team, resource and energies, etc. And then what do you do with Hog Ranch if it is as big as you think it is?
So, and this is the possibilities of the future. So we have a drill rig there right now. That should finish its program before the end of the year. it's only 13 or 14 holes, but it's 3 target areas. Once again, all risk on. Let's go drill here. Let's go. These are meaningful holes. That will tell us a lot about what we want to do next, and we can put another program together. It's already budgeted in our expenditure early next year after February, right? So there is a period where getting on site is just expensive because of the snow. So there's quite a bit of news flow without a lot of expenditure between the end of this year and early next year to allow us to decide, is this shaping into, can we point to a 5 million ounce, or are we looking at much larger? Then obviously there's some decisions. Do we monetize it? Do we bring in a joint venture partner to help pay for the exploration? Of course, all those conventional avenues. I'm not afraid of any of those. We're not wedded to it, but we have a board that are used to running a copper and gold business. And I actually think if you're a gold producer or an iron ore producer or a coal producer today, you need to be looking at a few different scenarios.
Okay, so Richard, look, in markets like this, where the markets are strong and powerful, everyone's a genius, right? Investors think that they can do no wrong and that they're always going to back winners, right? And same with management teams, same with bankers. We splosh the cash out when times are good. And management teams get very, very excited about the potential of what they can do. Gold 2,000, 3,000, wherever you sit in that equation. Obviously, copper thematic is fantastic. Supply demand fundamentals on a utility basis are, suggest that it's only ever going to go up. But that's not the real world. So, right. So you've got to say, hey, we are clearly focused on our copper project. We believe that we've got the team to deliver that. And whatever your board has done in the past, at your market cap, at your ability to raise capital, Hog Ranch could become a stretch and possibly a liability as a result. You never know. So what are you more inclined to do with that? Given that you guys are sitting in Oz, that's in the US. I get the de-risking component, but would a strategic partner make more sense?
Oh, could make a great deal of sense. And we have been approached on that basis, right? And we could also spin it out. Although I would favour, if we did that, into a North American listing, cutting it free entirely, because that makes a lot of sense if we went that route. But it might just be more expedient for us, right, to focus on bringing a partner or just completely selling it. The thing is, I kind of think there's more value in a listed entity at the moment, right? It's like, if you compare it to a competitor, right? Pick Liberty, 2 million ounces, 2 million ounces, grade, production rates, we could achieve the same. It's like, well, I'm not pretending that we are Liberty. We're not there in that space, but gee, if we're half a Liberty, this is worth a lot of money.
Yeah, no, and I spoke to Liberty when they, were nowhere near where they are today, and they had to come out of Turkey, and lots of water under the bridge there. But yeah, there are some obvious candidates who might like what you could prove up with not too much money. That'd be really interesting. But look, let's leave that to the point where you need to make that decision, or you have made the decision. See how clever you are. Can I come back to the kind of funding bit with regards to, in the context of ESG, because obviously, not only is the green thematic, the battery metal thematic, the copper thematic big, but so is the ESG narrative. We've just come off of COP26 as well, which kind of helps as well. But do you think, because it's copper, I think you alluded to it, that you can raise cheaper money? Is the money cheaper, or are there more players because it's copper and feeding into those thematics?
That's a really interesting point. So I'm going to see shortly, because I've actually challenged some of the banks. You're telling me, oh, yeah? Well, I'll give you, okay? If you want to back us, you don't have to, you're not going to control pricing, but you certainly can talk the deal with us. And I'm happy to deliver more in that vein if you would like. So what would you like? See, it's okay, it's copper, that's great. The chicken comes first. Don't worry, the chicken comes first. 1 tonne of copper. Well, the EU have just published on the back of COP26 that copper is going to be responsible for 25% of their total CO2 reduction, right? It's just straightforward. So, yeah, great thing. Away we go. We already have 60% renewable power in South Australia that we're drawing from, and we're drawing from the grid. We don't have to build a power station, solar or otherwise. It'll be 70% renewable by the time we begin construction. So we already are feeding off a renewable. But if you really care about this stuff, you care about, are you clearing forests? Are you operating in a high rainfall area upstream of villages? Things like this. I mean, there's more to E than carbon. Do you have to put down roads and build townships and airports and ports? No. So leveraging installed infrastructure is the biggest saving you can gift the planet, right? Is not to have to build a whole bunch of new stuff. It's just specific. So tick, 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 tick. Now, our starting point is awesome. Now let's talk about the remainder. The fact that 1 tonne of ours, 1 tonne of copper, and I don't have to get some complicated blockchain to prove it wasn't built with child labour or mined with child labour, right? It's come out of South Australia. Come on, guys, right? This is straightforward. This is an easy bet. But 1 tonne of that copper, people don't focus on this. When you look at what it's going to save in CO2, it's going to save between 107,000 tonnes of CO2. So it's already, we should, like, let's be real, compare it to any other extraction, right? It's already such a significant contributor. People should be buying credits off us. So it's a great starting point, but I think ESG should be reserved for much more than just carbon credits. We're on farmland with 30 centimetres of rainfall, foot of rainfall a year. Flat farmland that was cleared 100 years ago, so there's no rainforest, there's no endangered species. So the land's been worked for a long time as farmland, broadacre farmland. Not much rainfall. So what do you worry about with copper mine? Acid mine drainage. No acid mine drainage here. Any acid producing material that comes out of the ground is encapsulated 10 to 1 with acid neutralizing material. Then you don't have much rainfall. You've got no seismic activity. And if anything came onto site or was produced on site, it can't flow off site because the natural sump for the whole project area is the hole in the ground, the pit. And that's before we contemplate what that pit could be used for at the end of the life. Now, this is 1K from the ocean. Big granite, right? It's not like the ocean's going to come rushing in, but it's 1K away. And we're going to have a minimum of, say, a 500-metre drop. That could turn into one of the biggest almighty pumped hydro schemes on the whole east coast of Australia, part of a future, battery network. So there's a lot of boxes to check here that are awesome for an investor if they really care, right? If they really are interested.
Well, there's the big thing, right? We always have this debate, and I think I get more off camera from you CEOs than I do on camera sometimes because, it's like, look, at the end of the day, if I don't make profit, if I don't optimize a profit, I'm going to lose my job. That's the truth. So people, shareholders, big and small, say ESG, green, all of these wonderful phrases. Oh yeah, definitely. But at the end of the day, if I'm not making money, I lose my job. That's what the actual concern is. So I'm sort of intrigued about this kind of balance between doing things entirely the right way, and you're still a commercial business. You need to make money. You need to drive the share price up. So I get the delicate balance, but can I come back to something that you said with regards to the carbon credit bits? People should be buying carbon credits off us because we're that green. We've seen in nickel, right? Especially kind of the sulfide deposits, these large low grade sulfide deposits, that they are sequestering carbon dioxide from the air or from rainwater, and they are able to scientifically prove that they are doing this so that they can not only make their own projects, net zero carbon projects, but they're going to also sell carbon credits to other companies. Is there the equivalent in copper? I know you suggest that people should, but is there innovation in your space which allows you to do that or could allow you to do that?
Look, not what you're specifically talking about, not at our project, right? There is innovation. The coarse grind uses a lot less energy and a lot less water and changes the whole tailings scenario. So it's a tick, 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 fantastic. Probably, as far as we're concerned, if you look at a conventional metric, so people think about CO2 in very simple block terms, right? It's quite clunky. So do you produce a tonne? Do you plant a tree to offset it? There's that type of rationale. Well, we've got quite a substantial reforestation program of parts of our mine site as we go, right? But we're not crowing about all this stuff because it's just part of what we do on that continuous rehabilitation as we construct.
You should crow about it. Do you know why you should crow about it? There are carbon credit companies out there going to governments and saying, hey, you've got a forest there. We'll take that 100 hectares of your forest and we'll put a carbon credit against it. So it already existed, right? It was already there. They've done nothing.
Yeah.
Paying the government something and then getting huge multiples of that on the stock market. That's real synthetic and I think, quite frankly, a little bit underhand. If you are planting trees, genuinely new trees, then that is something you guys should be talking about, for instance. And that's why I wonder, is there a kind of collective understanding of what the narrative needs to be, what you need to do, and what people will give you credit for and what's real?
Well, I think we're learning as we go. So we've definitely hooked up with some outstanding ESG specialists who are working with us now. And they're going, oh, right, this is a good story, Richard. Yeah, it is a good story. We're not just, by the way, planting trees. We're also paying the government for the privilege because the timing of our planting doesn't suit, right? It's called an ESB credit offset in Australia. So we're paying twice. That's awesome. So I think as a company, shareholders can be proud of Rex, right? Rex is sexy for a bunch of reasons when it gets into production. And it's a very regulated project too. So it's not just like a lot of what we're able to do is a function of where we are and the deposit that we have, and it's the location, right? So, if it was a 2% deposit, right, instead of a 0.6, it'd be awesome. If the strip ratio, it'd be even more awesome, right? And you'd make trillions, okay? So you have your wins and your losses, but we've got quite a few wins. And I think at the end of the day, you've probably got kids. I've got kids. You go home, anyone under 40 is riveted to this. Anyone under 20. Right. Well, they think the world's about an iPhone. So, but, that's the generation coming through. You have to be able to face those people and be proud of what you're doing. We're in largely a farming rural area. It's 2 hours from Adelaide. Doesn't sound like a long way, but it's quite a long way. It's another peninsula across. So, they're people of the land. This mine has to operate in a very neat and tidy fashion, and it does. So to me, E is about a lot more than just CO2. There's so much more in it,
No, that absolutely is. Maybe you can come back on one day and talk it through, or one of your team can. Also, I'd love to have you come back and get a little bit technical with the drilling, etc. But look, I think I've taken up enough of your time today. I've got a good or much better understanding of what you're about. I'd love to see more of you as this moves forward. So appreciate your time today, Richard. We'll speak to you again soon.
Thanks very much, Matthew. It was good fun. Appreciate it. Cheers.